Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before beginning, I'd like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. Technical indicators are not accurate 100% of the time. Company fundamentals and macroeconomic factors can drive share price changes differently than what we'd expect based on technical indicators. My goal here is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. With that out of the way, today we're taking a look at Adtalem Global Education, ticker symbol ATGE. This is a micro cap company with a market cap just below $1.5 billion. They specialize in, as the name says, providing educational services. They own and operate several universities throughout North America with a particular specialization in medicine and veterinary medicine. And here we are on the annual chart, and you'll see this share price plummeted here, though it is not due to earnings, I'll point out. Here's the earnings back here on May 2nd, and we had this drop basically begin a little bit more than a month later. So we have this huge run down, and it looks like it found the bottom, and we got a green candle yesterday. So this looks like a good spot where this may revert to the mean and pull back towards the moving averages, which it is well below, far below those averages here. Then if we scroll down to the RSI, you'll see the RSI is oversold and has turned bullish again. The stochastics are again both oversold and have turned bullish again. And we have a significant run of red days here on the volume chart, although we did have this one big green buying day. However, the increase in selling volume has shifted over, it looks like, and we now get another green candle here. And the MACD has formed a trough deeper than any trough in the last year by a significant amount, in fact, and has started to creep back towards zero again. So all those are great signs that this could present a good swing trade opportunity. And if we switch over to the fundamentals, you just get a very broad overview of the company fundamentals. I'll note there is small short interest, 3.47% short interest. Now, the institutional ownership is 102.56%. I'm always curious when they get these companies that have more than 100% ownership, because obviously you can't have more than 100% ownership. So I believe this is due to some kind of share magic where they will have voting rights for shares that are not publicly traded or held by institutions, I should say, and they are counted as greater than one share that you and I might buy as retail investors. So if you happen to know how you get greater than 100% ownership, please tell me in the comments below. I'm curious to see how this company might do that. But moving on, you'll see this company does have a little bit more than average debt. It is more debt than 66% of its peers. And I'll point out that this is being compared to the educational service providers industry. So these statistics are compared just to other schools and companies that provide education rather than something that is, much more broad. And I say that because up here we see that it's in diversified consumer services in a broader category. And if we had to compare a group of colleges to something that might provide other services to consumers, I wouldn't feel the data is reliable. But since it's being compared to other institutions, other colleges, then we can at least have some confidence this data is accurate. So moving on to the PE ratio, this is an average PE for the industry, 19.21. That's a little on the high side, but still it's apparently right where it should be for this industry. And keep in mind, again, that is only after the recent significant drop in share price. Now, the gross margin is good. It is above average at 62%, beating out 62%. And the operating margin is very good, beating out 83% of its peers. The operating margin is below 12% here, so that's a fair operating margin, pretty standard. You want to see that between 10 and 15%. So we're right in that range. That's a comfortable operating margin that where they can make profits even if there are issues and there's a loss in gross revenue. Moving on to return on equity here, it is again above average, showing that it beats out 64% of others in the industry. Now, this is not a very big return on equity at 5.4%, but still, it's above the industry standard. So that's another positive. And growth rate is the real golden egg here. It beats out everyone, greater than 100% of its peers in the industry. So this is a group of fast-growing schools. Does not pay a dividend. For people who want a dividend, this is not the company for you, but for people who might want growth or a total value return, then I think this presents an interesting opportunity. So please let me know what you think of this company in the comments below. And if you got something out of the video, I'd really appreciate it if you hit the like button and subscribe to help out the channel. If you enjoy these overviews of possible swing trades, please leave a comment for the YouTube algorithm. Or if you'd like to tell me what I got wrong, I'm certainly willing to listen. That's all for today. Thanks for watching, and good luck with all your investments.